Have you ever wondered why many families create an HUF for tax planning? What exactly is a Hindu undivided family? Who can become its member? How is it taxed? And what are the major provisions every taxpayer should know? In today's video, I will explain the complete concept of assessment of HUF under the Income Tax Act. So let's get started. First, let's understand what a Hindu undivided family or HUF actually is. Under Section 2 Clause 31 of the Income Tax Act, an HUF is treated as a separate taxable person. This means it has its own legal identity for income tax purposes separate from its members. An HUF can obtain its own PAN. It files its own income tax return whenever required under the Act. An HUF can own ancestral property, property received through partition, gifts, inheritance, investments, bank accounts, and other assets. Similarly, income from house property, business or profession, capital gains, and income from other sources is taxed in the hands of the HUF and not automatically in the hands of its members. This separate status makes HUF a legitimate and effective tax planning tool. Now, let's understand who forms an HUF. The head of the family is called the Karta. Generally, the senior most co-parcener manages the affairs of the HUF and acts as the Karta. After the Hindu Succession Amendment Act 2005, both sons and daughters become co-parceners by birth and enjoy equal rights in HUF property. Apart from them, wives of co-parceners and other family members are also members of the HUF, although they are not co-parceners merely by marriage. Now, let's discuss how the income of an HUF is assessed. The HUF computes its total income separately. It may earn income under the various heads of income, such as income from house property, profits and gains of business or profession, capital gains, and income from other sources. After computing the gross total income, the HUF can also claim deductions under Chapter 6A subject to the prescribed conditions. Finally, tax is calculated according to the slab rates applicable to the HUF. The important point to remember is that income of an HUF is assessed separately and is generally not clubbed with the income of the Karta or its members. Next comes an important topic, partition of HUF. There are two types of partition. The first is total partition. Here, the entire HUF property is divided among all the members and HUF comes to an end. This is recognized under Section 171 of the Income Tax Act, subject to a finding by the assessing officer. The second is partial partition. In this case, only some members separate or only some assets are divided while the HUF continues. However, any partial partition made after 31st December 1978 is not recognized under Income Tax Act. For income tax purposes, the HUF continue to exist and will continue to be assessed. Now, let's understand Section 64 Clause 2. Suppose an individual transfers his personal asset to the HUF without receiving adequate consideration. In such a case, the income arising from that transferred asset is not taxed in the hands of the HUF. Instead, it is clubbed back and taxed in the hands of the transferor. However, if the transfer is made for adequate consideration, this clubbing provisions does not apply. So remember, transferring personal assets to an HUF without adequate consideration generally does not reduce the tax liability. Now comes a very beneficial provision. Section 10 Clause 2 provides that any amount received by a member out of the income of the HUF is fully exempt. The HUF first pays tax on its own income. After that, when the income is distributed among its members, no tax is payable again. This prevents double taxation. Just remember one important condition. The amount should be paid out of the income or income bearing estate of the HUF. Now let's discuss an interesting practical issue. If the Karta receives salary as a director of a company, that salary is generally taxable in the individual hands of the Karta. However, if the appointment or remuneration is directly linked to the investment made by the HUF, or represents a return on HUF assets, the fact needs to be examined carefully. Similarly, when the Karta is a partner in a partnership firm, the taxability of remuneration depends on the real source of the income. If the remuneration is earned because of the Karta's personal qualification, skills, or services, it is generally taxable in his individual hand. However, if it represents a return on HUF investment or arises because he represents the HUF, it may be taxable in the hands of the HUF. So always identify the real capacity in which the Karta is acting. Now let's understand the taxation of gifts received by an HUF. If a gift is received from a member of the HUF, it is generally exempt from tax. Certain gifts received from specified relatives may also qualify for exemption depending on the provisions of the Income Tax Act and judicial interpretations. However, if a gift is received from a non-relative and the aggregate value exceeds Rs 50,000 during the financial year, the amount becomes taxable in the hands of the HUF under Section 56(2)(10). So always identify the source of the gift before determining its taxability. Let's quickly revise everything. An HUF is a separate taxable person under Section 2 Clause 31 of the Income Tax Act. It has its own PAN and files its own income tax return. It can earn income under different heads and is taxed separately from its members. It also enjoys its own basic exemption limit and slab rates. Partial partition after 31st December 1978 is ignored for income tax purposes. Transfer of personal assets to an HUF without adequate consideration may attract clubbing provisions of Section 64 Clause 2. Amount received by members out of the income of the HUF are exempt under Section 10 Clause 2. And finally, when used within the framework of law, an HUF can be an effective tax planning tool for Hindu families. I hope this video helped you understand the assessment of HUF in a simple and practical manner. If you find this video helpful, don't forget to like, share and subscribe for more practical taxation content. Thank you for watching.